good, everybody? Happy Friday, Friday. It was a tough week for Wall Street today. We'll get to that in just a second. First, a little housekeeping. If you are just tuning in, we have our webinar next week right up here, up at the top, webinar.jazzwealth.com. If you're interested, I'm going to show you how $1 invested, even in this type of market, $1, what it turns into in the future. What difference does $1 make? We're going to do $5, $10, things like that. But you'd be surprised to learn what $1, what type of an effect that has on your retirement. So we're going to do that. For clients, remember, if you are making lump sum contributions and you have room for 2017 for your IRAs, let me know. Happy to make that adjustment for you as far as dating the contribution for 2017. So just let me know. If you're unsure how much you've contributed for 2017, let me know. I'll take care of that as well. Also, in the community section, if you go on our YouTube channel and click community, there's a poll running. We're giving you guys the choice. What should we post in the community section? It seems, I think at the moment, that short financial tips is in the lead. You have your choice of short financial tips, behind the scenes at Jazz Wealth, vote on the upcoming video topics, or my personal life. And don't pick that because you're not going to be very impressed if you pick that. But those four things, and it seems so far that the short financial tips is in the lead. So we're going to be doing something, I think, as long as that stays that way. I'll let the voting go through the end of the weekend, but we're going to do something called Notes from Jazz, which will be short, quick videos, literally 1-2 minute videos, just to show you a quick tip or something interesting that you maybe haven't already learned. So that's that one. What else? That's it. That's all for clients. That's all for everything. So what we like to do on Fridays is a quick client update to let everybody know how the markets did, how your investments did, the good, the bad, the ugly. We'll go over all of it. So I'd like to go over to the charts real quick, and we'll start with the S&P. And you see that thing on the screen? It looks like a waterfall, like just off the edge of a cliff. If you were to throw a knife or something off an end of a cliff, it would fall straight down. Well, every blip that you see on the screen, every red or green candlestick, they're called, represents one day. So here we could go back about 5 of these little blips and say, well, that's about 1 week. That looks like a pretty bad week. And yes, it was a bad week. The worst week since we've seen back here towards the end of January, early February. So very active, so much news to digest. And basically for today, traders just decided, hey, I'm going to take some risk off going into the weekend, recover, come back into the new week and see about what they're going to do there. So your weakest spots this week were tech. Tech had a great run. It did really, really well basically for the last 8 years. It's struggling a little bit here in the short term. Anything tech related or semiconductor related, which remember, we need the semiconductors to bounce if we're going to have the market bounce. We did not have that today. Even worse, we'll go over to financials. The financials were really weak today, down another 3%. Remember yesterday, in yesterday's video, I said, that bugs me a little bit. The fact that yesterday the financials were down more than the overall market, that was rare and kind of made you think, okay, there's a little extra weakness here. People weren't just responding to Washington headlines and that other garbage that's out there. So in the short term here, you've got banks and you've got the tech stocks that are really, really weak after having a good run up. Next week, we'll probably start with a little bit of the same, sort of that back and forth, indecision. On Monday, very, very common. So I would be shocked if Monday is a pretty boring day, I wouldn't be shocked. So that's that. Let's go over to commodities because those were some of the bright spots. If we go to commodities like oil continuing to make that move out of this downtrend that technical traders like to look at, headed back for the highs. Strong day for oil actually. And then gold as well. We talked about this on Wednesday or Tuesday or something, how this was a very similar sort of pattern or similar, traders would take a similar approach as they did on oil, basically because it was also breaking out of a little bit of a downtrend there. So commodity related products doing really well. That was sort of the bright spot of your portfolio. And bonds also. Can we look at bonds? Well, here's the bond futures. I don't know what happened to my... Oh, there we go. No, that's commodities. I guess I lost my bonds thing. We'll have to fix that. Bonds did well today. Very common. Stock market gets a little scary. People run to stuff that is not scary. Not as much of a run to bonds as you would think, but still not too bad. So the biggest thing to take away from this is for the markets to recover at all, this chart right here needs to start bouncing, and this chart right here needs to start bouncing. So just a bad week all around, people taking risk off the table, and that's okay. We're done with the spending bill, which I put on the thing right here, Washington not using nest egg. So we did our wine and wealth last night. We talked about nest egg and how you use it to budget. I don't know if you've looked at the spending bill or you've seen how they've decided to spend our money, but again, it's a complete disaster, and that's what we only know, right? The thing was like 2,200 pages long. So they are not budgeting money right. I mean, it just, when in doubt, they just spend. Ridiculous. So I won't spend a lot of time on the Washington thing. Just know that the government will not be shutting down as of midnight tonight. President Trump did sign the spending agreement, although he was pissed. He didn't want to sign it. He did a press conference. He was not happy. So clearly the negotiation didn't work in his favor this time around, but that's okay. We'll move on from that. So we've got spending, the government shutdown, that's gone. We've got the tariffs. Yeah, China kind of responded back and they're sort of fighting back, but it really isn't going to make that big of a difference. Plus, it's totally fair. I agree with what China did. I agree with what we did. So that's out of the picture. You've got the tech stocks that pulled back. People will see that as a value, and you will see a little bounce there. So that's a good sign. Facebook seems to be kind of fading away from the news, though that's not going away anytime soon. So, you know, got some things going on there. I wouldn't worry too much here in the short term. Like I said, the only thing that bothers me is the banks. Not liking the way the banks are moving. Not good. So overall, not bad. If you're a longer term investor, this has been a wild month. Well, now going on 2 months here. If you've been investing for a long time, not such a big deal. It doesn't feel good, but it's not such a big deal. If you just started investing somewhere between February and now, you're seeing a lot more activity, a lot more back and forth than you would normally see, and that, you know, kind of probably make you a little nervous, but not such a big deal. Let's get on to the PJs thing. So tonight on the podcast, I will be wearing PJs. Not only just, you know, not your average sort of pajamas, but some specialty ones that I had made a long time ago that my brother seems to think will be very embarrassing for me, because Micron Technologies down 8% today, and that was in our Stock Madness competition, that was my final pick. And yesterday they had earnings. Today, obviously, tech was weak. Very bad timing for me. So he beat me in the Stock Madness, and the deal was, if he beat me, I had to wear the PJs on the show, take a picture, and post it on Instagram. So they are currently being cleaned, and I will be wearing the PJs during the podcast. Basically, as far as Micron stock in the news here, they reported earnings. Everything was fine going forward. They have some supply disruptions, and so traders chose to focus on that just to get me to wear PJs. Nike, you're going to see that in the headlines today too. Nike had earnings that they did great. Earnings came in better than expected. They also announced that revenue was better than expected. They said strong demand in international markets was one of the driving forces behind their strong last quarter. So not bad. The stock was much higher. However, you know, weak market today. It was very hard for anything to stay positive. So that was that one. KB Homes was able to stay positive. This is a home builder. I don't know if you know KB Homes. They build brand new homes. And the XHB is the ETF for home builders. They needed some strong, good news. This is all the home builders sort of combined in one vehicle. KBH tried to help them out today. They said lots of good things. Earnings was good. Earnings came in better than expected. They said demand is steady going forward, and they don't see any reason why demand wouldn't continue to be strong going forward. So they had a decent day, 2.5% basically. You could see it was much higher on the day, but the weak stock market took hold and got the best of them. Dropbox, we'll just wrap up with that. Brand new IPO. I use Dropbox, happened to see it. I thought that was pretty cool. They're going public, I believe, a $9.3 billion valuation. The stock was up by 35% on its initial day. So on the screen, you only see one blip, and that's because it's only been open for 1 day. Today was the very first day to invest in Dropbox, and apparently investors really like Dropbox. So that's that one. Anyways, that'll wrap it up. Pretty short today, not much to say. Let me look at some of the questions from those of you that are watching us live. Let's see. Prior to jumping in, learn your investment vehicles and come up with your planned short-term, long-term goals. Yeah, I agree there. Yeah, China was down bad, not good over there. When will the Wine and Wealth video be up? You should have an email in your inbox at this very moment with a link to watch it. It is up and available right now. Let me know if you didn't get that email. I will send you the link. If I were a client, you should have received a link to the video. Oh, yeah, Chris helping us out. Thank you, Chris. Kevin, if you didn't get anything, let me know. Send me an email, Dustin at Jazz Wealth. I'll take care of that. And Mr. Panda says they bought Dropbox stock. Good for you. Good. So you like the IPOs and you got a chance to get in to Dropbox for the first time. Be interesting to see what Box does, the other company, because remember, those two are on different sides of the spectrum. Dropbox is more like retail, personal, like people like me would use Dropbox. Box is really on the sort of corporate side. They're going after the big business. So it'd be interesting to see if they find this to be an opportunity for them. We will see, and we'll go from there. So, hey, thanks for watching. I'm going to change this back over here. Remember, if you want to come to our live class, it's totally free. No strings attached. I'm just going to talk and ramble just like I'm doing now. Up here at the top, webinar.jazzwealth.com. Hope you'll join us there. I hope you have a great, great weekend. We'll be back to do all of this again on Monday. I'm actually going to chime in here over the weekend. I've got a really cool segment I'm going to do. It'll be live, so you can join us if you like, talking about spending money on vacation. Where you guys are spending your money, where do you get good deals, and how much should you spend on vacation? What is the actual amount that you should budget for, and how much is it going to cost you? So I'll probably come in over the weekend, do something live, so be sure to look out for that. Have a great weekend, guys.